interesting market backdrop that we have going on currently after a volatile start to August. The major indices are back to where they were pretty much on August 5, the day of the sell-off. Nasdaq already out of correction territory, and of course we have the big Fed Chair Powell speech on Friday. He'll be speaking at Jackson Hole, the annual economic symposium over in Jackson Hole, Wyoming. A quick poll here. Who here thinks Powell will signal a 25 basis point rate cut, and who thinks he'll go for a larger 50 basis point cut? Obviously a lot of speculation in the market right now. Will Powell signal a quarter percentage point cut on September 18, the day of the FOMC meeting? Or, there was, of course, recent speculation last week that the Fed will go big and deliver a half-point cut. Those bets kind of died down in recent days after recent data showed that the economy might not be heading into a recession. So, of course, there's a lot of speculation going into this big Fed speech. And so amidst this current backdrop, we'll try to, make sense of it all and, hopefully identify some new investment ideas, kind of copying where the billionaires are putting their money in. The recent 13F filings that came out last week. Now that the dust is kind of settled from that, I think we can, kind of go in and get a better understanding of what is moving the stock market, where the major billionaire investors are putting their money in, and hopefully that will give us a better understanding of where we should put our money in, of course, as well. So without further ado, I think we get started. Today's webinar will be titled, like I said, how to copy where billionaires choose to invest with 13F filings, the recent reports that just came out last week. My name is Jesse Cohen. I'll be your host today. For those of you who want to reach out on Twitter, I'm active there, Jesse Cohen INV. And you can, of course, also shoot me an email to my personal email address, jesse@investing.com. So feel free to do that. Of course, I'm available, and I always try to get back to whoever shoots me any questions, feedbacks, or comments. Just the agenda for today, give you an idea of what we'll be discussing. First and foremost, for those of you, of course, some novice investors are in here as well. So just a quick, brief breakdown of what are 13F filings. Then we'll just kind of move over into why tracking these filings even matter. And then we'll get into the good stuff, uncovering billionaire strategies. There'll also be an exclusive webinar gift offer from Investing.com, so stay tuned for that. And then hopefully we'll have some time. I'll show you how the InvestingPro ideas page, I'll use that in real time, kind of show you around how you can use that tool in order to gain further insight into the stock market. And then, of course, at the end, like I promised, there will be time for some audience questions or any picks that you may have, any hedge fund managers or billionaire investors, which I don't bring up during the session. Feel free to shoot me a comment on that as well. So, what are 13F filings? Basically, any asset manager who has over $100 million in investments is required by security laws to report those filings at the end of each quarter. The filings usually come out 45 days after the last day of a set quarter. So, for example, the ones that we just got last week, mid-August, came 45 days after the June 30 date, which was, of course, the end of Q2. So we just got those in mid-August. You can expect the next 13F filings to come out after 45 days after the end of Q3, which is September 30. And basically by law, these major investment managers and hedge funds, they are required to disclose their investment portfolio holdings, including number of shares and the market value of each position. And essentially, the transparency for investors is basically the purpose of these 13F filings, so that basically we kind of get a better understanding of what's going on, valuable insights into the investment strategies and portfolio decisions of these major players. So like I said, these 13F filings provide a window into the strategies of some of the world's most successful and wealthiest investors. And by analyzing these filings, we can gain insight into which stocks, of course, these investors are buying into and getting rid of. So why tracking 13F filing matters? Basically identifying the top picks from the from the biggest names in the financial world, like Warren Buffett, George Soros, Ray Dalio, David Tepper, just to name a few. We did see a big market moving portfolio decisions from those major investment managers just last week. And it's still, of course, we still have the opportunity to get into some of those names. And so forth. We also use these filings to discover new trends, and the direction of the market, market sentiment. If someone like Warren Buffett is getting rid of, a bunch of technology stocks, that is something that should be on our radar. We've seen that before, when Buffett got rid of the airline stocks before COVID, of course, or during COVID. So, not to be, a hindsight investor, but we could have used insight like that, with our own investment decisions. These filings also help us understand the strategies of some of the most successful billionaire investors and major hedge funds, and we can try to apply those principles to our own portfolio decision making. And so forth. Managing risk is another big reason to track these filings. Avoiding stocks and sectors that some of these major players are actively either increasing or reducing their positions in. That could obviously either signal further upside or downside for those specific names. And we can, of course, use these filings to have entry points into some of these names. A stock like Ulta Beauty, for example, popped 15% after Buffett unveiled his investment in the company. It's a cosmetics retailer. It was, kind of undervalued heading into the 13F filings. And, Buffett kind of saw an opportunity in the company. And, of course, price action tends to shift the narrative surrounding the stock. So all of a sudden, it went from a out of luck retailer, with downbeat sales prospects, into a major, potential recovery play. And we, of course, saw many investors follow Buffett into those companies as well. So, analyzing these filings, like I pretty much mentioned already, identifying the investment managers you want to track, whether it's the Warren Buffetts or the David Teppers or some, lesser known investment managers, which have done pretty well over the past 6 months. You want to, of course, go by recent performance. So some have been doing better than others. So you want to identify whichever investment manager or hedge fund you want to track, and just kind of monitor through the 13F filings, review and regularly examine these reports that come out, see what stocks they've been buying and selling lately, increasing their positions or reducing positions, and by that kind of identify patterns and trends that are emerging in the investment strategies and market views of some of these investment managers. If, for example, a guy like Bill Ackman, who's been known into getting into stocks, which he tends to mark the bottom in some of them. Nike, for example, is a name that pops up. He unveiled a big position in Nike last week, and we did see a pop in the shares of Nike after a major slump, a months-long slump in the stock, kind of reversed on the day that Ackman unveiled his position. So that's something to, of course, just kind of identify those patterns and trends and gain insight into the market trends and sentiment. Like I mentioned, whatever these influential investors are buying into, whether it's sectors or specific names, we should definitely take note of that and kind of apply it to our own investment strategies. Up until this point, is it pretty clear? Any questions that you may have, of course, feel free. Yeah, where do you get these 13F filings? Of course, it used to be that you'd have to go through the SEC website. It'd be very, very tedious, a process which was, you'd have to really go digging into some of those filings. Nowadays, though, and I'll show you, using InvestingPro, it pretty much aggregates all the 13F filings, the major buyings and sells of these portfolio managers. And we'll get into that later. Don't worry, that's a great question, because where do you get these 13F filings? Of course, that is the most basic foundation into following and copying these investors and where they're putting their money in. It used to be a lot harder and difficult, very time consuming, but nowadays with the power of the InvestingPro tool, it's all at the power of your fingertips. So of course, some of the billionaire investors to track, the most famous, especially in recent quarters, the names that have been making waves. Of course, Warren Buffett, everybody knows the Oracle of Omaha, his track record proven over the past 60 years. He did lose his longtime investment partner, Charlie Munger, a couple years ago, but Warren Buffett is still going strong, and he tends to have an outsized influence on the stock market. His investment decisions can cause, $1 billion in market cap movement. And of course, in my opinion, the greatest investor of all time. Bill Ackman, the founder and CEO of Pershing Square Capital, of course, is another big name to watch. Some of his successful investments over past years have been nailing the bottom in Netflix, as well as riding Chipotle Mexican Grill to all-time highs. Of course, Bill Ackman has a significant influence on the market. We saw that with Nike last week, the pop in the stock, which came as a result of him unveiling a new position in the athletic apparel retailer. And Michael Burry, the guy who nailed the Big Short, the housing crisis in 2008, he still makes waves. Mostly, his short calls are noteworthy. Of course, being correct in 2008. Whenever Burry starts kind of getting cautious on the market, that of course makes headlines as well. And of course, you can find all these 13F filings of all the major investment managers and hedge funds on InvestingPro. This is pretty much how it appears on the InvestingPro ideas page. Very simple and easy to use. We see the filters on the left side of the screen. Basically, allows you to track the performance of every major hedge fund and investment manager. We see the year-to-date returns, or the returns over the past 3 years for a lot of these guys. Warren Buffett, Bill Gates, another influential character in the financial world, the founder of Windows. He's still in the know. His calls tend to, whether ominous or picking a fresh tech stock, his calls kind of also tend to create headlines. Ray Dalio from Bridgewater, another legendary investor. So this is how it appears on the ideas page. I'll show you how it works in real time later on in the webinar. You just click on whatever investment manager you're interested in tracking, and all the holdings then appear. And the best part is you can copy those names to your own personal watch list, and of course track those stocks as well. Hold on, let me just get a drink here from my Investing.com mug. Sorry about that. So basically, uncovering the billionaire strategies. Basically, most important are identifying any significant new positions, increased positions in a stock. Like I mentioned already, there have been a couple of very easy to see examples with Ulta Beauty and Nike from last week. We'll jump into some of the other names later on. And in addition, whether on the downside, in contrast, if an investment manager makes a big reduction or actually sells out of an entire position, that kind of signals a reduced confidence in that specific stock. We as retail investors should kind of make note of that as well. And another one, of course, we kind of want in the search and identify for any unusual or unexpected investments. From previous quarters, for example, Warren Buffett took a position in the Swiss insurer Chubb. Everyone was kind of speculating that Buffett would kind of buy into a new insurance stock. But being that he tends not to, invest in European companies, Chubb wasn't really on the radar for many investors, as opposed to some U.S.-based insurance companies, which were, better bets. With Buffett making potentially making a new investment in the sector, but he kind of surprised everyone in the market by taking a significant position in a Swiss-based company. So that was kind of a first for Buffett in recent years. So that is something to look for as well. If any investment manager makes a big bet on, for example, Chinese stocks or Japanese banks, which Buffett and Ackman, I believe, were also buying into before the rally. So that is something, of course, we also want to keep an eye on. So recent filing from last week, Warren Buffett, I've mentioned him numerous times already during this webinar. Let's take a look at what he did in Q2. So he opened new positions in Ulta Beauty and Heiko. Two new stocks which were added to his portfolio. And just to show you how those companies reacted, let me just pop up here on Investing.com and show you what, the reaction in Ulta, pretty much really highlights how significant, some of these announcements can be. And being first in the market, to react, being first to react to those filings can actually earn you money, or earn money or lose money. Let's take a look at the stock here. The recent performances have been really bad. We did see the stock, of course, peak back in mid-March, and then it kind of fell all the way from 570 all the way back to 325. This was a bad earnings report right here, and the stock gapped down and never seemed to recover, and it fell all the way down to 340. A big drop for a company, one of the biggest cosmetics retailers in the US. And of course, the Buffett bottom kind of came in here around these levels, 320. The stock popped 15% all the way back up to a high of 390, approaching 400. So we saw Warren Buffett's influence on this stock right here. It does have a gap to fill back here at around 500. I'm not going to say that the stock is going to move in a straight arrow back up all the way to the 500 level, but over time, I do expect ULTA to rebound back to these levels right here, probably around potentially early next year. So Ulta Beauty is a name to keep on your watch list. We'll see if Buffett adds to this position in Q3, and that, of course, could really be the catalyst needed. One good earnings report and another vote of confidence from Warren Buffett, and Ulta Beauty can very easily, pop all the way back up. If I open Investing Pro on Ulta Beauty and I kind of take a look at the fair value for Ulta. Right now it is pointing to almost 26% upside to a fair value price of 464. So that would be up from where it is trading today at around 369, according to Investing Pro Fair Values tool. Where we could see 25% upside. The stock, a great financial health score of 4 out of 5. So that, above average. It's got great profitability prospects. Kind of taking a look at the stock performance over the past year, it's down 17%, but still, taking a look over the past 5 years, it was at 148. That was the COVID bottom on March 2020. It is still significantly higher than where it was. However, the downbeat performance over the past year, I guess, prompted Warren Buffett to, kind of take a look at the stock. We see here, some of the pro tips that Investing Pro highlights. So, profitable, it is profitable. The profitability prospects are still strong, regardless of the company performance. So Ulta Beauty, looking at the fair value health score, considering that Warren Buffett took a position in the company, that is something to be, very, very considerate of. If I want to take a look at Heiko, can also kind of see maybe less of a pop here from Buffett, but we do see here the name, kind of rebounds from where it was to a, there was a initial pop, but it kind of went back down. So we do see some reactions like that as well. Not everything is going to be a straight arrow up. But if Warren Buffett thinks it's a good enough company, then, who are we to argue? Just taking a look at the performance over the past decade, pretty much, it's been trending higher, and if Buffett thinks that this company will continue to outperform, then Heiko should be on our radars as well. With that being said, he completely liquidated his positions in Snowflake and Paramount. We already knew about Paramount. He took a loss on this company actually. Did not work out as expected. The streaming company has kind of run into a lot of issues lately with a high production costs and lower profit margins. So investors have kind of been selling this name relentlessly since the start of 2023. So Buffett did exit that position. We did see him also completely exit his position in Snowflake. Time will tell if he made a right call on this one. This also kind of tends to, match well with his reduced position in Apple. He sold almost $80 billion worth of Apple to reduce his position by 50% in the company. Perhaps Buffett is making a bearish bet on tech stocks. We'll find out about that. Interesting in the energy sector, he of course continued to increase his position in Occidental Petroleum and now owns, I believe, almost 25% of the company shares. This could be a bet that energy prices will continue trading at above their historical average. And Chevron is another name as well. Even though he reduced his position in Chevron, his portfolio allocation from the company actually went up. So that means that Buffett is still betting big on energy companies. And he also increased his position in Chubb, the Swiss insurer, which I mentioned earlier. This is the one company that we saw a significant pop in our 2020 at the end of Q1, of course, when he first unveiled his position. So that would be around this area right here. We saw the pop higher, and looking at the chart, it looks like it wants to break out to new all-time highs. All-time high was set at the start of August. So looking at this company, Buffett is outperforming with Chubb still, holding strong and increasing his position. So that is, of course, a name to be on our radar. I myself have followed Buffett into Chubb. And so, this is really something that you want to take into consideration. Any questions that we might have? Let me take a look here before we jump into the next slide. Yes, we'll talk about AI. Of course, everybody wants to know about AI. We'll see how AI can really help. Different features, of course, of Investing Pro are powered by AI, including Pro Picks. Is it not too late to get into these shares after the big buys have already bought? So that's a excellent question. Everybody wants to know whether the pop was already did we already see the initial pop in some of these stocks? I think judging by Chubb, the reaction in this company after Buffett first announced his position, it is still moving higher. Obviously, if you're a long-term investor, then that is something that you want to keep into your portfolio decisions. Take that into account. If you're a short-term swing trader, you're making daily trades. Perhaps you'd be more. Obviously, there's a whole different set of tools which go into day trading, a lot of technicals, but of course, that stock might be more, could enjoy volatility on those specific days, both to the upside and to the downside. But if the pop has already been made, then no. Just kind of show you a Nike, which is another company which I had this on my watch list for a number of weeks. Ackman kind of beat me to the bottom. I was waiting for Nike to retest its COVID low. Recently, the company really has suffered a significant losses in terms of its stock. A couple downbeat earnings reports and uncertain prospects for the world's biggest athletics retailer. I was kind of hoping for the slump with Nike shares to fall back to around the $65, $62 level. I had a buy order in there waiting for Nike to reach those levels. And, I guess last week, Bill Ackman beat me to the punch, and he unveiled his position with the stock bottoming at around $70. Being that it was on my watch list, and I still believe Nike is going to move back up to its recent highs. I mean, what? Nike is going to go out of business. People are going to stop wearing Nike. It's the biggest athletic retailer in the world. We just saw it in the Olympics. Almost everyone was wearing Nike apparel. In my opinion, there has been a lot of overreaction in the market. The bear sentiment went a bit too far with Nike, and I am, similar to Bill Ackman, I am bullish on the company, and I kind of went in and bought after Ackman. It was still kind of early at around the 73.50 level. I kind of went in there, a couple days after the initial pop higher. It was a retest of this low right here. And I kind of went in there, followed Ackman on Nike. And, is it too late? Is Nike, it's up to 83 right now. Is it too late to buy Nike? In my opinion, no. We see this, big gap, gaps are like magnets at times. Gaps always get filled. both to the upside and to the downside. It could take time, but the gaps usually tend to get filled. That means Nike first gap is at around 88.78. So from here to this level, we still have about let's say 5 to 7% worth of gains. There's another gap up at around 93, and I think the biggest gap, the back at 120, where it was at the end of 2023. I believe we do get back there. Maybe not by the end of this year, but probably early Q1 2025. I believe Nike will be trading back at triple digits. Zooming out on the chart, its all-time high in 2022. Solid business. Like I said, it's not like Nike is going to go out of business and go bankrupt all of a sudden. All the major athletes are wearing Nike. We got the start of the NBA season approaching. That could be an upside catalyst. So of course, Nike is a name which I believe still has further room to run higher. A lot of gaps to the upside. This could very well be the Ackman bottom. He tends to call the bottom on a lot of stocks, and right here, this area right here, when Ackman unveiled his position, that could, of course, be a significant buying opportunity. Let's pull up Nike on the InvestingPro dashboard. Still further upside despite its big performance over the past week and month. It's up 6.5% and 11.6% respectively over the past week and month. Despite the 11% gain over the past month, we're still looking at further upside with the fair value price of $91. So looking again at the chart, that is exactly pretty much where the first gap area is right here. So the fair value price signifies about 9% upside. Looking at the company itself, it's been raising its dividend for 22 straight years, so it's a solid income stock as well. Raising dividend for 22 consecutive years, and it's been maintaining a dividend payment for 41 years. So obviously cash flow is not a problem. Profits and sales are trending higher. Taking a look at its earnings page right here, there will be some more pain, I guess, in the near term before Nike kind of sorts out its direct to consumer business. But besides that, all it needs is one good earnings report, and the stock can really turn around here. So yeah, hopefully I answered that question. There of course will be ups and downs along the way, but for the most part, if it's good enough for an investment manager or a hedge fund who's managing $500 million, for example, in assets, then it's probably good enough for most retail investors, myself included. Are these high-profile investors artificially driving the market? That's a good question. There's a lot of, I guess, pros and cons. A lot of different opinions on that. But let me save that one for the Q&A session, because I want to, of course, offer. There's an exclusive gift from Investing.com. Just taking a look at the examples from Nike and Chubb. And the fair value and the power of InvestingPro, as InvestingPro looks to level the playing field between the major institutional investors and the small-time mom and pop traders, the retail investors, guys like yourselves and myself included. There's a special gift offer from Investing.com. An additional 10% off on top of the 50% off InvestingPro summer sale, which is still going on. It's in its final days, so take advantage of this limited time offer and enjoy major savings using exclusive coupon code 13F Pro. 13F Pro could get you an additional 10% off on top of the 50% off already offered on Investing Pro annual and biannual subscriptions. All you need to do is apply coupon code 13F Pro, and you can see the savings. Automatically receive the additional 10% off. And enjoy a special price for the annual Investing Pro subscription. Of course, savings on the biannual plans are even higher, so take advantage of that. 13F Pro, if I didn't mention that already. Now, I did see someone ask, will there be a webinar, will there be a recording sent out? There will be a recording sent out. Ready, I see my man Ready, or asking this question. Will a recording of this webinar be available after the session? So yes, if you signed up with your email, then you will get the recording straight to your email address, and kind of have this for afterwards for you to look over again. In addition, if you signed up and weren't present in the webinar, you can still enjoy that savings with the 13F Pro coupon. You can still enjoy that by watching the webinar recording. And I believe this will also go up on the Investing.com YouTube page. So follow that, subscribe as well. So now I believe we have some time. We still have some around 10 minutes here for the Investing Pro Ideas in Action. I want to show you guys how this page works out. Basically, log into Investing Pro. You've got this dashboard here on the left. Watch list ideas, Pro Picks AI. I know someone asked about that. I'll save a couple minutes at the end to delve very briefly on Pro Picks AI. We got the advanced Investing Pro stock screener as well, and charts of pretty much anything and everything in the stock market. But let's go to the ideas page. Like I showed you earlier, all you need to do is click on a name and you automatically get here at the bottom. First of all, his largest holdings. So even though Buffett sold out of 50% of his Apple position, it still makes up a significant percentage of his portfolio. So that is something you want to keep mind of. Obviously the headlines, in order to make the story a bit sexier, Buffett sells out of half his Apple position, can really sound bearish for the stock. But when you break it down, his biggest bet remains to be Apple. So that is something you want to take into account. Right here we have a very useful, for those who asked earlier, where to find 13F filings, how to analyze it, how to break it down. Investing Pro does all the hard work for you. If I want to look at Buffett's biggest buys for Q2, I can look at that. Oxy Petroleum was his biggest buy. Chubb, he increased his position to that in that company. Sirius XM, he took a new position in this stock. Kind of taking a look at Siri, this stock trades at about, I believe it was like $2 before Buffett went into it. At around this level, $2.50. It's not often that Buffett makes an investment in a company of a stock trading under $5, but we did see a pop higher initially, to almost doubled in a matter of a week, from 250 to 450. And then, of course, it kind of went back down, retesting that breakout area, and looks like it defended that zone and looks to run back higher to its recent highs. Siri is a name. If you don't have a lot of capital in your portfolio, this could be a stock which you want to hold on to. Make an investment in long term. Buy some Siri, forget about it, and this stock could potentially go from 325 to where it is right now, back to around over $5. It's 2024 high, or actually it's recent high from late 2023. All it needs, for example, is to unveil some AI related feature which helps the streaming, or whatever it needs, the upside catalyst to drive this stock higher. If Buffett took a fresh position in Sirius XM, then this stock could provide some interesting value. Let's take a look at Siri. Very simply, I just click on that name from the Investing Pro Ideas page, and Siri dashboard right here opens up with a fair value of $4.73. We're looking at potentially 38% upside in Sirius XM Holdings. So, 38% upside, that is pretty significant. And if it's trading at, what is it, 380 right now, or 325 actually, it's trading at 325 right now. It's got a fair value price target of 473. We're looking at 38% upside. This is changing because it's it updates in real time according to the price and pre-market. So we're seeing the shifts here in real time. Siri XM, taking a look at the pro tips. It is trading at a low PE ratio. Buffett kind of loves those value stocks. It's maintained a dividend payment for 9 straight years. So, it's generating cash regardless of the stock performance. Since 2016, it's been paying a dividend with a pretty decent yield of 3.27. So, of course, Warren Buffett likes this company. And so, this name should be on our radar as well. It's affordable, it's cheap, and we could have potentially seen stocks bottom here in mid-June. And the fresh move higher, we see the technical price action here as well, a potential cup and handle, emerging here, and that means that we could expect to see the stock in by the end of this year, in mid-November, actually, November, December, could be at around 550. So Siri XM is a name to be on your radar. So again, all I did was click from the Buffett Ideas page, and it showed up, automatically. So these are his largest holdings. If I want to see Buffett's biggest sells over the past period, then of course we see Apple here. That was his biggest sell. Liquidated Snowflake, reduced his position in Chevron, got rid of Paramount Global, and so forth. So that is Warren Buffett's portfolio. Let's take a look at Michael Burry, Scion Capital, Scion Asset Management. All you need to do is click on the search here, find your investment managers. Let's take a look at the recent 1-year performance. So we see Scion kind of underperforming the market over the past years. Burry has been a bit bearish during this impressive rally in the S&P 500. But when you look at the 5-year return, well, he's been underperforming the market over the past 5 years as well, pretty significantly. But again, Michael Burry is a name. He did make a big bet on Chinese companies at the end of Q2, whether it be Alibaba, Baidu. So China's biggest tech names were his big buys. Looking at his sells, actually, he got rid of Citigroup, got rid of Block, HCA Healthcare, which is a hospital healthcare provider in the U.S., got rid of that name as well. Very interestingly, he increased his position in Alibaba and Baidu, but sold out of JD.com. And then again, very simply, by InvestingPro over here, they organize it very well. The most undervalued stocks by fair value upside. So Baidu looking at almost 60% upside potentially from where it is trading right now. Baidu is another name. It's been kind of suffering a years-long sell-off as a result of different policy shifts from the Chinese Communist Party. So we saw the stock really jump higher here, hit all-time highs. of around 260 back in January 2021. And since then, it's really fell hard to hit levels last seen in 2010. But of course, this level seems to be a significant support area. Whether Baidu breaks or holds will remain to be seen. But according to Michael Burry, and according to the InvestingPro fair value tool, Baidu is looking at potentially, substantial upside from these levels. It's at around around $88 this morning, and the fair value is closer to 130. So that indicates 46.5% upside, for Baidu. Let's take a look at another name which tends to make waves in the market. George Soros, the famed legendary investor. His fund, or his family fund right now, is run by his son Alex. Let's take a look at George Soros, right? Oh, these are company names. I'm in the wrong filter. There we go. Soros. So there's actually Soros Capital Management and George Soros's personal portfolio. So the really, in terms of the 13F filings, you don't have to go digging for all these different filings from different websites. It has the personal stock portfolio and the we see his Buffett performance, or the Soros performance over the past 3 years, outperforming the S&P 500, and over the past 5 years as well, outperforming the market 135% to 106% for the S&P 500. Very interestingly, his largest holding, of course, is the SPY ETF index. Apple, AstraZeneca, Alphabet. So this is George Soros's personal holdings. He bought some more Apple in Q2, in addition to Alibaba, and he sold some Alphabet, sold some Amazon. Novo Nordisk, the maker of Wegovy, so probably took some profits on that company as well. But we did see a bet here in the tech sector. He's bullish on Apple and Amazon, I believe it was, right? Apple. Oh, so he's still bullish on Alphabet. He just reduced his position significantly in the company. Let's take a look at the Soros Fund, which I guess is the family fund run by his son, Soros Capital Management. And we see over the past year, again, significant overperformance over the past 5 years by over 100%. For the Soros Capital Fund. Its largest holdings is Ranpak Holdings. Ranpak Holdings. To be honest, I'm not familiar with the company, but let's pull up the stock. Ranpak Holdings. Not even sure what it does, but wow, look at this move. It was trading at $2.67 in November 2023, and it reached a high of $9 in August. So that is a triple bagger, or actually more than a triple bagger when you account for the move from the bottom to the peak, from $2.50 to almost $10. So Soros Capital Management. Someone asked before, if some of these asset managers were perhaps, artificially influencing the market. This could be, again, I'm not Gary Gensler. I'm not the SEC chair, but wow, yeah, this is very interesting for a stock. Ranpak Holdings. It did trade at a high above $40 in 2021 and collapsed all the way to a low of 270, in mid 2023. So big move in Ranpak Holdings. Just look at the monthly chart. But Soros, made a big bet here. Turned out to be a successful one. whether the stock can still recover and move higher and move back towards its highs over here. Like I mentioned with gaps, there's a big gap here to fill at 1467. It remains as the Soros Capital Management Fund's top holding, Randpack Holdings, making up 16.5% of the portfolio. So Randpack Holdings is a name. Do some diligent research on this one. Let's pull up the InvestingPro fair value tool on it. It is showing some modest downside, but taking a look at its performance over the past year, up 30%. Just very, very impressive. Good call from Soros. What did Soros buy in Q2? Iris Energy. Iris Energy is another energy producer, probably a mid cap. Iris Energy trading at $8.13. It was at a high. I guess this is a recent IPO. IPO'd at about 28. The opening day price 28, and fell all the way to a low of $1 in late December 2022. Opened at 28, fell all the way to $1, and recovered back to about 15 in July. Very interesting. Very interesting picks by the Soros Capital Management Fund. But if you hit a stock at 338 and ride it all the way to above $9, you're looking at big gains. So it looks like Soros has made some successful bets. He sold out of the tech sector. All the major sells in Q2 we see here: Meta Platforms, Microsoft, Amazon, Nvidia, AMD, Salesforce, Netflix, Uber. So DraftKings really got out, really looked for headed for the exit regarding those stocks. Very interesting to see. Pack and Iris Energy. Take a look at that at those stocks. I wasn't even aware, but I'll probably do some due diligence myself on these names and see where we head afterwards. Anybody have any specific names that they want to see? Let me run through the questions here real quick. Hold on, just bear. So someone asked about the AI features. One more name. Let me show you one more name from the questions here. Obviously I don't have time for everybody. Let me just pick one here. There are a lot of questions. Thank you all for being so engaging. Let me show you one more manager before we get into the AI feature of Pro Picks. So David Tepper is one that shows, or let me show you one more, David Tepper. David Tepper from Appaloosa Management. Where is Appaloosa? It's probably under Tepper. Okay, so David Tepper's portfolio, and then let me show you the custom search results real quick. So Tepper, biggest holdings are Alibaba, Amazon, Microsoft, Meta, Alphabet. So he's actually bullish on tech sector. All the biggest names in are in technology and China. Baidu, PDD Holdings, the owner of Temu, and Alibaba, which makes up the largest stock in his portfolio. His biggest buys in Q2 were Microsoft, Lyft, Nvidia, KWeb, which is the China Internet ETF, JD.com. So we see a big bet on China-based names. It's very similar to Michael Burry. So if you want to identify these trends, it looks like long China tech is perhaps a bet that is emerging. His biggest sells were Meta, Amazon, Baba, Oracle, AMD. So even though he remains bullish on tech and they remain his largest holdings, he did reduce some size in the sector. And we did see, the sell-off happen in early August. Perhaps, someone always knows something. Again, somebody asked if they artificially move the market. So, these billionaire investors, someone always knows something. Let me show you here a very cool feature over the past year. If I'm only looking for asset managers that outperformed by 20%, 20%. So right here, Buffett, Bill Gates, Dalio, Scott Ferguson, who is a protege of Bill Ackman. He runs his own fund. Nelson Peltz is the activist investor who had a battle with Disney earlier this year. So if I'm only looking at companies that outperform by 20%, then of course these are the names that pop up. If I want to see hedge funds and managers which have, let's say, up to 20 holdings, then I can search for that as well. Number of holdings. What else is a cool feature? Oh, yeah, investor type. Do I want to follow? Let's just follow billionaires and activist investors and see what shows up here. But of course, here there are several other features, other filters here for us all to kind of play around with. Bill Ackman, I did speak about him earlier. Let's see what he did. Bill Ackman, his largest holdings are Hilton, Chipotle Mexican Grill, restaurant brands, the owner of Burger King, and Alphabet. So, of course, he's bullish on many of these consumer facing stocks. His biggest buys in Q2, Chipotle, Brookfield Corporation, and Nike. So the Nike position right there, where it was a new position, and we saw him move the stock, and saw many investors, myself included, follow him as well. And just looking at his biggest sells in Q2, also joining other major investors in billionaire investors in selling out of tech, with Alphabet being his biggest sell in Q2. So hopefully kind of showed you how we can use the Investing Pro Ideas tool to identify new investment ideas and kind of have different names on our radars, gain further insight into where the major players are putting their money in and allocating, and how that can help us, the retail traders, make those decisions as well. Now, real quick, we only have about 4 minutes left. I want to show you how AI is used in Investing Pro, the Pro Picks feature, outperforming the market by, we see here over the past 10 years, total return outperformance, over 700% for the BPS and the S&P 500 strategy. Just a quick peek of what names are in the strategy right now. Obviously unlocking insight by subscribing to Investing Pro. You can unlock insight and access to all these names. NVIDIA, Qualcomm, CrowdStrike, Ford. I see PayPal over there. PayPal making a recent recovery. So of course, anybody subscribed to Investing Pro can unlock access to these stocks picked by AI every month. There's a monthly rebalancing, and according to that, you can buy into those names and sell out of the ones that were removed from the strategy. This is the Tech Titans. The outperformance has been mind-boggling. Annualized return of almost 29% over the past few years. And again, some of the biggest names in this strategy right here, giving you a sneak peek. Some big names, some lesser known names like NVIDIA and Commvault. Teradata is another one which should be on your radar. So this is just a quick peek. Pro Picks, Investing Pro. By subscribing, you unlock access to this feature as well. So basically, that was our time for today. Hopefully I answered all the questions here. Sorry for those who I missed out on and did not. Hopefully, we'll have another session on this in the future, and we can, of course, delve into other asset managers and investors that we can monitor. But again, Q2 or the Q3 13F filings come out in a few months. That it will be our next opportunity to kind of gain further insight into where these major players put their money in. Obviously, no one knows what will happen in the market tomorrow, but if anybody knows, it's those big time investment managers, the market insiders, if you will. So of course, very worth to keep an eye on. So that's all for today. Hope you enjoyed, and thank you all for attending the webinar. And good luck to you all. May the trading gods be with you. Thanks, and the webinar recording will be sent to your email. Have a good one, everybody.